Well, hello and welcome to Talking Global Infrastructure. Now, for this episode of our podcast, we're in Washington, D.C. in the United States for the annual Infrastructure Week. And this time, we're bringing you a transatlantic team effort. Because I'm Simon Montague, Director of Corporate Affairs at the Global Infrastructure Investor Association, and
I'm David Quam, the Senior U.S. Advisor to GIIA and based here in Washington, D.C.
Now, David, you have been lobbying around infrastructure for many years, and I'm sure you are extremely well connected. What happens in Infrastructure Week?
So this is actually Infrastructure Week number 12. And it has been an ongoing effort to try to raise awareness of the importance of infrastructure. And that's how it really started. It's gone through multiple administrations trying to get new investment. This is one of the first ones where we're celebrating the success. And we're talking about, look what was done. Let's talk about where we are. So this one's been a little bit different. This is an administration gets to talk about what they've built, where we are 2.5 years after passage. And then interestingly enough, and we'll get into this, what's next?
Now, you were on stage, actually, earlier this week with the American Society of Civil Engineers, because they've produced a report called Bridging the Gap. And what it does is look at two possible scenarios for the future, one in which funding continues at the sort of level it's at now under these bipartisan infrastructure laws, and the other, a less optimistic scenario under which when these bills expire in 2026, funding snaps back, as they say, all the way back down to where it was before COVID. But you were actually on a panel, weren't you? What was going on there?
So the panel really focused on transportation. And we had officials, a local official from Miami-Dade County in Florida. We had another from Washington State, the state DOT director, Department of Transportation director. And they were talking about what had all this investment done for transportation. My role was to talk about the role of private investment and the increasing role of private investment with regard to some of these projects in the United States, and what effect has IIJA had on bringing more private investment to state and local government and these projects. Fascinating discussion. You know, this is the group that puts out the report card usually, the very famous report card about all the bridges in the state of infrastructure. And their old report used to be called Failure to Act. So you talk about the sea change. Just look at the titles. Failure to Act. Now it's about bridging the gap.
Which is a sign of progress.
It is a sign of progress. I think really maybe bridging the gap was good. I think another way to put it is we're not done yet.
All right. Well, the civil engineers' analysis of the situation right now makes very clear that what it calls feasible, forward-looking policies and collaboration across all levels of government with the private sector are going to be vital for future infrastructure modernization. What do you make of that?
You know, they've really hit the nail on the head. Infrastructure is the baseline for all economic growth and prosperity. There are so many things that have to be rebuilt. They have to be maintained, and there's new infrastructure that has to go in. One of the most fascinating things when you talk to the engineers, when they talk about a road, it's not a road anymore. It is broadband, it is energy conduits, it is transportation sensors, it is data that's being fed back for public safety. All of these are now networks that they're all interconnected. And engineers sees this the same way private capital has to see it, as a complete system. I think that's what was so interesting about that topic. And so when they talk about the future, we should no longer be talking separately about roads, rail, water, wire. It's all one. We have to talk about all infrastructure.
And when you got off the panel you were on, I think you went off to find an old friend of yours for a further conversation about this.
Well, and that's one thing about Infrastructure Week is anybody in infrastructure comes to town to be part of this conversation. And yes, one of GIIA's members from IFM, Giancarlo Peressutti, ran into him. And so we had a conversation about what does this week mean?
Well, I think it might be the 12th Infrastructure Week, but it's probably the first where we really have something to show for it. And by we, I mean the country, not any one entity, not any one state or city, et cetera. And at IFM, we're certainly bullish on the prospects of infrastructure, if for no other reason that the country has turned its attention to what had been a bit of a political punchline for many years to seeing real results. And I live in the New York area, as you know, and I know you guys are headed up to JFK tomorrow to take a look at that new terminal. But LaGuardia, which was a glorified bus station for so many years, is now, the envy of not any national airport, any global airport. And I think between the real bricks and mortar that Americans are starting to see and the energy transition, which I assume we'll talk a little bit about later as well, I think American citizens and certainly we at IFM can begin to see the fruits of the government's labor when it came to the painstaking process, hence Infrastructure Week number 12, that got us to this point.
Well, I think you raised a good point. I mean, we are 2.5 years in. Most projects aren't even through permitting or RFPs yet. I mean, we're really at the beginning of this, yet the fact that you're saying starting to see fruits of that labor, I think that's a kind of a game changer here.
It is, and I'm sure you and I read the same article. I think what I read is we're 50 to 60% through the appropriation and less than 20% through the implementation. And obviously, there's a big impetus to get a lot of these projects online. So more Americans can realize what those of us who spend our days fixated on the topic know and can see, which is where's the progress and, how is it going to unfold and how is it going to bear fruit?
Part of what we're doing here this week, and GIIA is going to be we're hosting a roundtable. We're having a discussion with other groups, and we are already hearing people talk about reauthorization, the next bill. Most of us feel like, as we've been talking about, we're just starting the first bill. But if you have a 5-year bill, 2-year Congresses, this is going to come in a world of hurry after the election. What do you think we need to do to try to keep this momentum? There's concern that Congress will just go back to doing what it had always done versus trying to keep this momentum. Is this generational, or is there something we can do to change that game?
Well, I do think, again, the people like you and me who are fixated on this topic know that 5 years, nothing gets built in 5. You're not going to build a bridge in 5 years or a bridge of note anyway. And so I think the expectation always was that it was going to be a multi-appropriation, which is to say a decade plus long project. You and I, David, have worked together on public-private partnerships, which is a key element for infrastructure and for infrastructure financing. And on that front, I think we have a lot of work to do. And I think that as an industry, and certainly IFM as a company, telling leadership in Congress that certainly great that they appropriated the money they did for grants and other programs to help get U.S. infrastructure back up on its feet. But there really is a role for the private sector to play in the financing of the trillions of dollars that we have yet to spend in terms of what's needed. And getting a next Congress focused on that, especially if it's a Republican Congress, in theory, they should be more ideologically aligned to the benefits that public-private partnerships can bring. Obviously, that's a generalization, and there are plenty of Democrats that we've worked with who've been fantastic on the issue. But I do think that's one area where industry has room to grow and room to educate Congress in terms of what they can do in a 2.0. And I'll just conclude that point by saying, as you well know, there is this report mandated in the last bill that has to go to Congress that sort of assesses where P3s are in the U.S., what their impediments have been, what their successes have been, et cetera. I am very curious to get my hands on that report and see kind of how this administration frames the issue. And I think that will serve as a jumping off point for enhancements and improvements that industry can advocate for in the next bill.
For this next one, trying to figure out or carve out that role for private capital. The civil engineers just came out with a report called Bridging the Gap. And what was really interesting about it is they said, even with this once-in-a-generation investment, we're still looking at over $2 trillion worth of hole. And if we snap back and don't keep the investment up, it's even larger, like 2.9 trillion. The most interesting part, though, was there's a new demand. This level of investment, and let's go to electrification. The United States is putting money into chargers, actually really spearheading electrification of transportation, school buses, cars, building the network out so you don't have to charging anxiety as you drive across the country. It's a jumpstart that's only going to create more demand.
Couldn't agree more. I think, when it comes to this issue, we spend a lot of time talking about the government's role and Congress's role and getting projects online. What I think gets left behind to a certain degree in the conversation is the element of expectation that Americans are going to now have. We started this discussion talking about LaGuardia and what a gorgeous airport it is. Now, when Americans fly through that, they're going to say, why can't my airport look like that? Why does my highway, have potholes and doesn't have kind of electronic gating or whatever it is? So the expectation now, I think, is elevated to an unprecedented degree. So not only is there pressure on government to complete these projects, but you have the consumer, if you will, in the form of average, normal, everyday citizens who use these infrastructure assets, demanding and wanting more. And to your point, trillions of dollars have to be expended to see that through to fruition. And private capital, I believe, is going to have a very large and important role to play in that.
I think it's going to be critical. The federal government can't pick up that bill. State and local government has to be part of that. Private capital has to be part of that. Everyone's got to be involved, I think, to really build the infrastructure of the future. Mm-hmm. From IFM standpoint, where are you looking to put money these days?
Well, as anyone that knows our firm knows, airports are one area of expertise for us. We own 16 of them all around the world. And there is still, with the possible exception of New Haven, Connecticut, not a privately managed, leased commercial airport in the continental United States. You have to go down to Puerto Rico to find not only the one example, but I think Puerto Rico is the shining star of the Caribbean. That's their slogan. Well, that airport is a shining star of privately managed airports in San Juan. It's wonderfully run. And we would really love to work with a mayor, a governor, a county executive to see if we couldn't bring some of the best practices that IFM and firms like ours hold and bring that to bear to have a first of its kind privately leased, run, and managed airport in the continental United States. And I'll give you one kind of spin on that. I think one of the phenomenon post-COVID that I've noticed is the importance of regional airports. Now that folks are not having to commute to big metro centers 5 days a week, not in all cases, but in some cases, that allows families to move a bit further out. And as is the nature of work these days, that often necessitates air travel. And so regional airports in the U.S. have taken on, I think, an importance probably unparalleled in our history. And when you listen to governors, and we've talked to governors who have affirmed this, they're really interested in how they can add capacity, how they can add best practices to some of the regional airports in their states. So something like bundling up a bunch of those regional airports in a state, perhaps like Colorado, just to use one example, I think would be very attractive, both from an investment standpoint and also from the public sector side.
To get there, I think this next bill is going to have to send a larger signal, right? Mm-hmm. Where for private capital to have a bigger role, it's almost like we are changing a culture. The United States has been funded, infrastructure has been funded, at least public infrastructure, with municipal debt for 120 years. That being said, our latest pulse survey says that the U.S. is now the number one destination for investors, mainly because of all the activity and the opportunity. How do we change? And you and I have had this discussion before. The sense that we've been talking to each other for 12 years. Now we have to go convince everybody else.
Yes.
What do we need to do to get that done?
Well, as you know better than anyone, the two impediments to true P3 critical mass in the United States is financing. You talked about it, where I think the only country in the world, or one of the only countries in the world, that finances their infrastructure through tax-exempt bonds, et cetera. So money is relatively cheap. And if you're a governor, a mayor, a county executive, you say, why do I need private sector money when I can issue a bond? But that's really only one half of the equation. And the other half of the equation is just simple, raw politics. It is a gamble, no question, for a leader at the state and local level to say, I am going to turn the keys over to arguably the most visible asset in any jurisdiction, a bridge, a tunnel, a road, an airport, to the private sector. Because in that scenario, most of the time, the public's not going to know that it's XYZ Corp that's, leased and managing a road, a bridge, a tunnel, an airport. And if it goes well, okay, it goes well, great. No one, zips through LaGuardia, as beautiful as it is, and say, boy, it's such a pleasure to be here. No one's writing there, no one's writing the Port Authority to tell them that. But you can bet your bottom dollar that if something goes wrong, it's the public official that's going to take all of the heat and all of the blame. And so we understand that. Those are the political risks. But I think that we as an industry have to do a better job of convincing public officials that we are their partner, not just from a writing a check standpoint, but from a relationship management standpoint, from a stakeholder engagement standpoint, from a sometimes neighborhood standpoint to get these deals passed. And we don't just come with a checkbook. We come committed to the success of a project in its totality. And I really would like to see our industry do a better job of getting on our front foot to make that case.
I really can't say it better than that.
Well, David, I have to say that was fascinating to hear that honesty about the political challenges facing public officials and how private investors do actually need to step up and help themselves.
So much of this is how are we talking about the future and what is the message? We cannot use the old messages. Giancarlo said, we've got to use new messages. We have to have a more optimistic story.
Well, while you were chatting away with Giancarlo Peressutti of IFM, I was across town with another of our investor members, and that's Plenary Americas. And I met up with Sia Kusha, who's Global Head of Business Development, and I asked him for his take on how effective the IIJA has been.
Well, that's a really good question. If you go back and take a look at the statistics over the past 2 years, now, mind you, IIJA is a 5-year bill. Typically, 5-year bills have about a 7-year spend calendar. If you go back through the first 2 years of IIJA and just simply look at the statistics, numbers show that the actual dollar volume of construction in highway and bridge, just as an example, have gone up about between 20 to 30%. But that doesn't necessarily mean that we have done 20 to 30% more actual construction because, as you remember, we had the pandemic, we had the supply chain issues, we have the significant inflationary pressures on labor charges and labor rates. So when you strip those unconventional items out of the 20 to 30% increase, you will see a true volume increase of anywhere between 7 to 10% of total program that has been delivered. Is that enough? That's really the $1 million question, right? There have been many projects over the past 2 years that would not have ever seen the light of day unless if it weren't for the dollars that IIJA provided. But it's not simply IIJA. There's the CHIPS Act, there is the Recovery Act, and a whole host of other programs that in totality have provided significant dollars not only for the traditional infrastructure, but they have also funded new infrastructure, broadband, telecom, a lot of the associated industries related to greenhouse gas reductions, to carbon neutrality, EV transitions, fleet work, and so on and so forth. So in total, I think it would be a disservice to say that IIJA and the associated programs have not had a significant impact. Would we as an industry like to have seen more? Absolutely. Our needs are there. And as huge of a program as IIJA was, it certainly was not enough. I think the combination of the different elements, the pandemic, the inflationary pressures, and the supply chain issues eroded some of the potential impact. But I would still consider IIJA a generational act to fund infrastructure, repair, refurbishment, new builds in this country. And we certainly need to remember that as we go through the remainder of the 2.5 years of IIJA, we will see an acceleration of expenditures because the rulemaking process would be behind us. Any potential legal challenges to those rules would have been settled in the court system. And the process through which these dollars would come to market would be accelerated. And we also need to remember that we certainly need those dollars in the marketplace, having had impacts at every county, every municipality, every state highway, in order for us to be able to begin in earnest the discussion of reauthorization, say, summer of 25.
Well, that certainly seems to be the topic of the American Society of Civil Engineers report, Bridging the Gap. And I think it's fair to say that the engineers have pointed out that there is a distinct benefit for every US family in the level of investment that's happening. But they also have a look 10 and 20 years ahead, and I'm sure you're familiar with the report, and say, look, if America does snap back to the lower level of spending before the two big bipartisan infrastructure laws, then the funding gap for infrastructure is going to be even bigger than it would be with the new level of spending that we have now. So when it comes to Congress looking to what happens to funding beyond 2026, how much of a risk do you see? Do you really think that it could snap back and this once-in-a-generation opportunity be lost?
When you go back and take a look at IIJA passed with, I believe, if I remember correctly, 13 Republican votes in the House and a significantly better margin in the Senate. But remember, because of the divisiveness of politics in the U.S. and because of the very, very tight margins in both House and the Senate in terms of majority, and because of the way the polarization of the politics have happened over the past several electoral cycles in Washington, every Republican who voted for the infrastructure bill was somehow targeted back home in their local jurisdictions and local districts because of the perception or because of the image that they voted for President Biden's plan or they voted for the other fellow's plan. We cannot have a bipartisan effort that breaks down when we're talking about infrastructure. Infrastructure used to be probably one of the very few things in Washington that was never partisan. Infrastructure was always agreed to by everybody because it took money back home. It impacted families, as the American Society of Civil Engineers have said many times. But that became a partisan fight when IIJA was passed. The impact of those actions and the impacts of the forced primaries in certain districts and what happens with the next electoral cycle this fall, 430 some House members are up for re-election. Certain number of Senate seats are up for re-election. So depending on what happens post-election in November of 24, I am hopeful that we can have a broader majority in both houses that would be able to be reasonable enough to sit across the aisle from one another and look at infrastructure the way infrastructure has always been looked at in Washington, as a nonpartisan or a bipartisan effort, really in order to make our economy better, to make our defenses better, to impact the families who live, work, and play in this country. If you were to ask me today to handicap what that's going to look like, I honestly wouldn't be able to tell you.
It's a knife edge, is it?
It really is a knife edge. It absolutely is a knife edge. And it's one of those conversations that what happens between now and 12 months from now, not only with respect to the results of the elections, but also with respect to how much work do we really do out in the field, how many dollars of construction get put out, how many projects get started, how do the average citizen in this country sees the value of those infrastructure dollars being used up, and that would all of that will then tend to lead the conversation back in Washington.
It's a kind of terrifying prospect, really, because I guess the mood here at Infrastructure Week, perhaps not surprisingly, has been quite upbeat, because if you're not optimistic, then you won't get what you want. But to think that this once in a lifetime, or I should say, to think this once in a generation opportunity is that much at risk, in your view, is worrying. Is worrying for Americans. I mean, there've been opportunities to renew infrastructure before, which have been lost, as I understand it, and this one is a good opportunity.
Well, this was a fantastic opportunity, and and again, as if you go back and take a look at over the past 2 years, the amount of work that has been done under this, not only in highway and roads and bridges, rail, airports, ports, municipal infrastructure, it has been tremendous. My worry, and I think the industry's worry, is simply this. If we are not able to continue to deliver at the rate that we have been delivering over the past 2.5 years, over the next 2.5 years, and then a couple of years into the next program, and if we can't continue to show members of Congress, the House and the Senate, that their efforts were truly worthy of recognition and accolades, those members that would have to cross party lines, regardless of who is in majority, to generate a bipartisan replacement for IIJA, would not be willing to risk their political careers as they did 2 years ago.
What role is there then for infrastructure investors such as yourselves? I mean, particularly at Plenary, you are experts in public-private partnerships, perhaps to a greater degree than many of your competitors in our industry. Is there a role for investors themselves?
I think, we as investors, we have always advocated that it is best to leverage public funding with private financing to do projects faster, to generate significantly better outcomes, value for money, if you will, for the ultimate users of assets. We have the opportunity to use federal funding that are going to fund projects that would typically be done traditionally and turn those into significantly different asset delivery programs, not only during the immediate design and construction, but also through managing them properly and through taking care of those assets on behalf of the public owners for a much longer period of time. So as we continue to deliver on the promise of private investment, private concession type contracts in asset delivery, I think we can show that the shortfall, if you will, at the federal funding levels on any 5-year program or any shorter term infrastructure package can certainly be leveraged with private equity in order to deliver the infrastructure which is badly needed and more than likely will never be able to be fully funded in the short time frame that is needed to get us back to where we need to be. Ultimately, these are public infrastructure assets. Ultimately, the public has to fund them. That funding will take many, many generations. What we can do as private equity investors, developers, and operators of public infrastructure is to make sure that we keep our promise and we generate value for money, not only short term, but significantly longer term, in order to show that the model works and the model is really there for the benefit of the constituents.
Simon, Sia is right, and obviously has a very keen ear for the politics going on here in the United States. All of our members, of course, there's so much political risk in the deals they do. I am not surprised that he is so well attuned to what's happening here. And it is going to be an interesting 6 months. As everybody always says, elections have consequences. And certainly when you got this much money out there, if we have a change of administration or a continuation of an administration, both will define the policies that will lead us into the next reauthorization when we have to do this all over again.
Well, David, it's been fun talking. It's your 12th Infrastructure Week. It's my first Infrastructure Week, and I hope our listeners have enjoyed it too. So thank you for joining us on Talking Global Infrastructure. You can, of course, subscribe to this podcast on Spotify and iTunes, and you can follow us on LinkedIn as well, as more and more of you actually already are. So thanks a lot for your support, and we'll see you next time.